It's a Tuesday night. Nothing special about it. You open your banking app to check something quickly, not worried, just checking. And then you stop scrolling. The balance is lower than it should be. Noticeably lower. You start going through the transactions. $14 for lunch on Monday. $22 for takeout on Thursday. $6 coffee on Friday morning. $31 on Amazon for something you had to read the description twice to remember buying. A subscription charge you forgot was still active. Another one you didn't know existed. None of it is dramatic. No single purchase stands out as the obvious mistake. No luxury item, no impulse splurge, no vacation you forgot you booked. Just a Tuesday, a Wednesday, a Thursday of ordinary decisions that added up to a number that doesn't match the month you thought you had. You put the phone down. And you think, where did it go? If that Tuesday night feels familiar, you are not managing your money wrong because you lack discipline. You are managing your money wrong because of how your bank account is structured. And those are two very different problems with very different solutions. According to U.S. Bureau of Labor Statistics data, the average household spends over $3,400 a year on dining out alone. Nearly $10 a day, every single day across a year. Not because most people decided to spend that much. Because most people never decided anything. The spending happened in the absence of a system, and the absence of a system is itself a decision, just one that gets made for you. This video is about the system that changes that. Not the discipline version of the solution. The design version. Why one bank account is working against you. Most people have one main account. The paycheck goes in. The rent comes out. The groceries come out. The coffee, the takeout, the Amazon purchase, the subscription, all of it comes out of the same place. One account. One number. Everything flowing through the same pool. And this is where the psychology breaks down. Your brain sees one number. You check your balance and it shows $2,200. Your brain registers, I have $2,200. That's the number. That's what's available. But here's what your brain doesn't automatically subtract in the background. Rent, $1,200. Utilities, $180. Phone bill, $85. Insurance, $140. Subscriptions, $45. Those 5 categories alone total $1,650, which means the actual money available to spend on anything flexible is $550. But you saw $2,200. And $2,200 feels like a completely different amount than $550. The decisions you make with $2,200 visible are different from the decisions you would make if the screen showed $550. This is not a failure of character. This is how human cognition works. Behavioral economists have studied this extensively. Richard Thaler, who won the Nobel Prize in Economics for his work in behavioral finance, found that people are systematically poor at mental accounting. When money sits in one pool, the brain treats it as one pool. Not as rent money plus grocery money plus spending money. Just money. The result is what psychologists call frictionless spending. Tap the card. Tap the phone. Click buy now. No pause. No calculation. No moment of genuine decision. The spending happens because the environment makes it the path of least resistance. And when spending is frictionless, the brain stops evaluating purchases carefully, not because you stopped caring, but because the system stopped prompting you to think. The two-account system. The solution is not to develop stronger willpower. The solution is to redesign the environment so that frictionless spending becomes structurally impossible. It takes 2 bank accounts and 1 automated transfer. That's the entire system. Account 1, the bills account. This account has one job. Pay fixed monthly expenses. Rent or mortgage. Utilities. Insurance. Phone. Internet. Subscriptions. Car payment. Anything that appears every month on a predictable schedule. When your paycheck arrives, the exact amount needed to cover these fixed expenses transfers automatically into this account. The transfer is set up in advance so it happens without any decision being required in the moment. The money moves before you see it as available. This account has no debit card attached to it for spending. It exists for one purpose. The bills leave from here. Nothing else does. Account 2, the spending account. This account receives everything that remains after the bills account is funded. Groceries, dining out, entertainment, shopping, anything flexible. This is the account you actually spend from. Here is what changes. This account shows you your real spending money, not your total balance, not your paycheck, not the number that includes rent and utilities already committed. Just the actual amount available for flexible spending. Let's put numbers on it. Monthly income, $3,000. Fixed expenses, rent $1,200, utilities $180, insurance $150, phone and internet $95, subscriptions $55. Total fixed, $1,680. This transfers automatically to the bills account on payday. Remaining, $1,320. Of that, $500 goes to savings. $300 goes to investments. $520 goes to the spending account. When you open the banking app on a Tuesday night, the spending account shows $520. Not $3,000. Not $2,200. $520. And $520 is a number your brain can actually work with. It prompts evaluation. It creates natural friction at the point of purchase. It makes the question, do I actually want to spend $22 on this? Answerable with real information instead of a vague sense of what you think you might have. Why this works when willpower doesn't. The reason most people's relationship with money doesn't improve despite genuine effort is that they're solving the wrong problem. They identify the symptom, spending too much, and apply a willpower solution. Try harder, track more carefully, feel worse about purchases. The symptom returns because the environment producing it hasn't changed. The two-account system changes the environment. There is a well-known study about food consumption and proximity. People eat significantly more candy when the candy bowl is on their desk than when it's across the room. Same person. Same candy. Same level of wanting the candy. The only variable is how much effort is required to reach it. Increase the friction and consumption drops. Not because willpower increased, but because the environment changed. Money responds to the same principle. When all your money is in one visible pool, spending from it is frictionless. When your spending money is separated and clearly limited, the environment creates the friction that willpower was supposed to create but couldn't sustain. This is not a hack or a trick. It is applied behavioral science. You are designing your financial environment to produce the behavior you want instead of fighting the environment you have. The objection everyone has. The most common response to this system is, couldn't I just track everything mentally in one account? Technically, yes. In practice, almost no one does it consistently. Here's why. Every purchase in a single account system requires a mental calculation. Current balance minus committed expenses equals available amount. Then assess whether this purchase fits within that amount. Then remember to do the same thing for the next purchase. And the next. And the one after that. Mental math is exhausting. The brain takes shortcuts when exhausted. The shortcuts look like, I have $2,200, this is $14, that's fine. The $14 is fine. The next $14 is also fine. The $37.14 is technically also fine but has collectively become a problem that only becomes visible on a Tuesday night when the balance is lower than expected. The two-account system eliminates the math requirement entirely. You open the spending account. The number is your reality. No calculation. No mental model required. The system did the accounting in advance so you don't have to do it in real time. The benefit nobody expects. Most people who implement this system expect it to reduce spending. It does. But the more significant change, the one that surprises almost everyone, is what it does to financial stress. When bills live in a separate account, already funded, already sitting there waiting for the charge to arrive, the bills stop feeling like a tax. Rent due on the 1st? The money has been in that account since payday. No scramble. No mental calculation of whether this month is tight. It was handled before the month began. Insurance auto payment hitting on the 15th? Already there. Not a surprise. not a disruption to the spending account. It goes out of the bills account exactly as planned. The specific feeling this produces is control, not the abstract sense of being financially responsible. Concrete, specific, this number is what is control. The bills are handled. The spending account shows exactly what's available. The savings are already moved. Everything that needed to go somewhere has gone somewhere. What remains is what you actually have. Most people have never had this feeling with money. They've had the feeling of checking and hoping. The feeling of estimating and guessing. The feeling of Tuesday night surprise. The two-account system replaces all three of those feelings with one, certainty. Setting this up. The practical setup takes approximately 10 minutes. Step 1. Open a second checking account. Most banks and credit unions offer this at no cost. Many can be opened in the same app as your existing account in under 5 minutes. Step 2. Rename the accounts clearly. One is bills. One is spending. The names matter because they create the mental model every time you open the app. Step 3. Calculate your total fixed monthly expenses. Add every recurring, predictable charge. Rent, utilities, insurance, phone, internet, subscriptions, any fixed debt payments. This is the number that will transfer to the bills account on every payday. Step 4. Set up an automatic transfer. On payday, the bills amount transfers to the bills account automatically. The remainder lands in or transfers to the spending account. The transfer happens before you have a chance to make decisions with the full balance visible. That's the system. No budgeting app required. No spreadsheet. No tracking every individual purchase. One transfer, two accounts, one number that accurately represents what you actually have to spend. What this is really about. Personal finance advice typically assumes the problem is behavior and prescribes more of the behavior. Spend less. Track more. Budget harder.